Hello, I'm Mark Lowdy. Among the trading tools at your disposal are contracts for difference. They're not quite shares and they're not quite foreign exchange, but they do give you exposure to both of these asset classes using largely electronic platforms that are not part of the local stock exchange as you might be used to. Now, we're going to hear more from Sandy Jadeja, who's the Chief Technical Strategist at City Index, who's visiting for Singapore Investment Week from London. Welcome to Singapore.
Thank you, Mark.
Thanks so much for coming today. When you first talk to people about contracts for difference, what's the dictionary definition that you give them?
Well, contracts for difference is basically an agreement with another party to say that we're going to be exchanging prices. In other words, I'm going to make an agreement with you to say that I'm going to buy or sell at a certain price. And that's as simple as that it's actually explained that.
Do retail investors get their heads around this easy? What are the top 5 hurdles, perhaps, that you've come across?
Well, people do get it, but obviously with anything, the first time you pick up a subject is always quite difficult. So what I've suggested to people is take your time. Don't rush into this. You know, sometimes you've got to get across some keywords, it's new terminology. But the first 5 things that people need to pick up on is, first of all, go steady, take it easy, don't rush into it, and take your time. One of the biggest problems is that people just jump in head first without actually understanding the risks that are involved. And so the second aspect is know your market. You know, a lot of people just trade local markets, but with CFDs you now have the opportunity to trade global markets and global products like foreign exchange, commodities and stock indices, and of course the stock market itself. Thirdly, because we're trading leverage, you need to understand what is leverage, how does it work, and what are the advantages of leverages, and also what are the disadvantages as well. And then of course we've got to be able to understand the functionalities of these tools. In other words, you don't just trade these instruments all day long. You know, there's the adage of being a day trader, but there are certain times during the day when the markets move and certain times when they don't move. I think that's one of the biggest problems that I find from people is they have this mentality, Mark, that they're going to sit in front of a screen all day, make lots and lots of money, and they do, just to give it back again. So you need to understand the market, you've got to understand the timings itself. And then, of course, one of the most key important elements, understand who you are. What is it that you're trying to do? What's your game plan? You know, if your objective is to get $100,000 out of the market, does the market move $100,000 enough to give you that? You know, sometimes some markets don't move as much, and some markets move a lot more.
Well, let me pick you up on that first point. You do actually have a trial account on your website. So why is it that people just rush in head first? Can't they just do the trial account, test the waters with monopoly money, as it were?
I'm going to put it in a very blunt statement. You can make a lot of money on a dummy account. But the reality is, when you're trading for live, you've actually got your emotions online. And so there's a big difference there. And what I've found from my experience is that once you've opened up a trade in, let's say, a demo account, you'll often just let it run because there's no money involved. There's no risk involved. But I've always said this, you know, you walk down the street, you throw $1 on the floor and nobody will hear it, but drop a coin and 100 heads will turn. And so when there's real money involved, there's real emotions involved. And so you'll actually become more alert and more aware. And I think that's really important to understand.
So should you not just then pretend that it's a trading account, like a dummy account, so that you leave your emotions at the door?
No, I think there's an argument here. Some people would say, open up a test account. My adage is that open up a real account, but fund it with a small amount, an amount that you can say, if I lose this, I can sleep at night. The reality is that just trade on a real account, get to understand how it works, but put the emotions online.
Right. Which brings me to the risks, which you also addressed. What risks should investors be aware of?
The first thing is that markets move up and down. The markets don't always move up, and so there's the risk of the markets moving against you. What I found here in Singapore and in Asia, of course, these are emerging markets, is that people have the view that the markets only just go up. I did a talk back in China a few years ago, and the markets was in a bull run, and I said, look, you've got to be careful, the markets can fall down.
And it
Didn't
did.
listen, and it fell dramatically. And so people don't have the experience of dealing with markets that actually come down. And so understand that the risks are that the markets will move up, they'll move down, but they also move sideways, which is actually quite risky because what people do as human beings is they want to get busy and they want to do something. So learn how to protect yourself, not just when markets go down, but also when markets go up, so that you've got stop losses in place, you understand what the volatility is, which is really important. You know, different instruments behave differently. And the way I explain it is no two human beings are alike, they have different personalities. And so stocks, commodities, foreign exchange have different personalities. And you've got to try and figure out, is this something that I can get on with?
You've kind of addressed my next point too about know the markets. Presumably you would pick an asset class that you're comfortable with.
Yeah, but again, getting comfortable, you know, we often read the news, we see TV, and sometimes we're misled because we hear something on TV or we watch the news and we think, oh, actually, we should be trading that. That's not necessarily true. That might be true just for that moment, but there are other markets which are moving which actually haven't been picked up on the radar. And that's why what we do is teach technical analysis to show you that actually sometimes there are certain things that are happening in the markets which are giving you very subtle clues. Once you learn to pick up on these clues, you can actually place yourself ahead of some big moves. And that's really, really important, Mark, because there are tools nowadays which were just unheard of 15, 16 years ago. And so placing things like buy stop orders, sell stop orders, enables you on the platform, electronic platforms, to place orders in the market. And when the market moves, it automatically triggers it for you. So at the same time, it's getting you in, it's placing a protected stop for you. And so these are things that people need to learn to understand.
Well, the irony is that risk is the only thing that is truly within your control.
Yes, death and taxes, as they say. So, you know, you need to understand the risk. The risk is there. Learn to control that risk. And there are tools in place. There's education. Thankfully, Singapore is now growing in education. We are one of the proponents in providing good quality education. Learn how to manage risk and let the profits take care of themselves, as they say.
What about the current markets, zooming out a little bit? Because you mentioned volatility just now. Arguably, we've never had the sort of volatility that we do now. Business cycles, in fact, one of the other programs that we're recording for Singapore Investment Week involved Song Seng Woon from CIMB, very well-known local economist. He's been around for so many years, but even he points out that we used to have 10-year market cycles. Now we have 15-month
That's right.
market cycles. So does a platform like this actually help you, or does it expose you to that sort of volatility?
Yeah, that's a good point, actually. Let's understand one thing. Internet has changed the way people live now and the way people think. So what these markets have actually now having to become adjusted to is the volume of people coming in, the different personalities that are coming in. People with no actual backgrounds in the markets itself whatsoever. They used to be sealed room environments, as we used to say. But what you need to understand is that as more and more people come in, more and more volume comes into the markets, they become, we can say, irrational in some respect. You know, the markets, let's take Europe, for example. A lot of people think, well, actually, with the condition Europe is in right now, with the condition the US is in, why is the markets going up? And so what we need to do is we need to adapt, and that's one of the key skill sets, is being able to adapt to current market environments. And so these long-term cycles, we used to get 20-year cycles, they've now come down to 10 years, which actually come down to what we call 2-year cycles. And it's like weather patterns, you know, there are seasons. And so you need to understand what season are we in the market right now. Is this the kind of season that I can adjust to? So if the markets are heating up, can I handle that kind of heat? You know, is the volatility suitable for me? Or do I like quiet markets? And the good thing about this is that because the tools are there, we can look at average true range, which is simply telling us how much this market's moving. And so, well, this market moves on average about 60 points per day. I'm quite happy working with that, even in a volatile environment. And sometimes the markets are quiet, but there are other instruments, other markets, which are moving rapidly enough for us to participate and take some profits out there.
But earlier on you also said that you might need to be a day trader, but it doesn't mean that you have to sit in front of the screen being busy the whole time. Really? I thought with the volatility you had to pay more attention than, you know, what you used to do. Put a stock in the bottom drawer and leave it for 6 months.
No, for 13 years I spent my life behind a screen, so I was a full-time day trader, and I don't do that now. I'm a lot older, I don't have that type of energy. But do you have to watch the screens all day? Let's put it this way. How sad would it be at the end of your life? And they said, well, what did you do with your life? Well, I sat behind a 17-inch screen. I upgraded to a 21-inch screen, and I watched the markets. And this is why I keep saying the tools are there now. Did you know, Mark, that there are certain times of the day, let's say, for example, the euro-dollar, there are certain times of the day when you can go into the market, place a very simple order, and then just walk away. But human nature is such that I want to watch what's going on. And that's fine, but as long as the risk parameters are in place and say, I don't want to lose more than this amount, you can actively trade, as we say, in the markets, but without having to watch the screen. And I keep going back to use the tools. Let the markets work for you rather than you working with the markets.
It's a shame you're only here for 2 weeks. Is there another chance to catch up with you at some
Yes,
point?
we're providing seminars at City Index. We're providing regular ongoing seminars. And with the advent of internet technology, we are able to provide webinars as well. But I'm actually in Singapore quite a lot now. In fact, this is probably my 9th trip in 7 months.
Right.
But a great place to be. It's just the humidity that's a little bit awkward.
Hotter than the market sometimes.
Absolutely.
Isn't it? Great to see you. Thank you so much for coming in, Sandy, from City Index. And Singapore Investment Week does offer you more opportunity to learn about the markets. Go to the URL on your screen now for Singapore Investment Week, 25th to the 31st of August. Thanks so much for watching. I'm Mark Lowdy. Have a great day.